Welcome back to It Starts Now, the happy hour of finance and business. My name is Stanley. Today's guest graduated from Morehouse College, went on to the University of Denver to become a CPA. He also owns a family firm. One is located in Georgia, down in Atlanta, and the other one is in New York City by Rockefeller Center. He's here to talk about corporate taxes and so much more. Please welcome Jason Bovell.
Hey, thanks, Stan, for the great welcoming. It's good to be on. I look forward to having some dialogue.
Man, I'm excited to have you here because one thing, you have a lot of knowledge when it comes to corporate information or when it comes to taxes, but also, like, I've known you for quite a while now, and we always had good conversations, and everything led to always something positive, and I always took some good information from it. Before we begin, because we have extensive history, so we could really talk for quite some time. But I'm going to try to keep it, nice and timely. But before we begin, I always wanted to ask this question. You're from Brooklyn, Flatbush area, and you decided to go University of Denver. Like, how did that come about?
That's a funny story. So I'm going to give the real edited version. So I really had no plans of going out to Denver. I really wanted to, when I completed my undergrad, come back to New York to work. Long story short, I was forced into doing a tax competition and representing my school, Morehouse. And after the competition, the University of Denver, the head of their tax program, reached out and offered a scholarship, an opportunity to further my education out in Denver. For a while, I was like, no, I'm not going to Denver. But then as it got closer to graduation date and looking at the prospects of, am I ready to enter the workforce? Am I ready to join my father's firm, or should I continue my education? It came down to the last minute where I said, hey, you know what, let me try this opportunity. I'm glad I did it. It turned out to be a great opportunity, met some interesting people, did things that I never would have done if I wasn't in Denver. And I still go back from time to time to visit Denver. So very happy that I did it.
At the time, did you feel isolated? Like, were you like the minority,
That's a great way of putting it. Yes and no. So there were
Okay.
others that came to Denver that was in the school that I was able to associate with, but obviously the minority numbers were low, but I still had a great time. It took me almost no time to make friends and to get into fun college things. So, it still had a great experience. It was just different.
Okay. Well, I always wondered that because growing up at the time, I don't even think we were even thinking about Denver, or even other states on that side, on the West Coast side. But that was interesting that you were one of the first ones to pioneer and say, oh, okay, out of all of us to say, okay, I'm going to go all the way out there and to experience that. But that's great.
Funny you said pioneer, because the school's mascot they're called Denver Pioneers. So, a little bit of irony, but yes, it was very unique. This is really the pre-internet days. Everyone was like, where? Denver?
Yeah.
Denver?
Yeah.
You know,
I was one of them. Like, what?
yeah,
Denver?
the only thing on the West Coast or out west for New Yorkers was California. Outside of California, it was like, where? So
All right. I'm still shocked by that, but it's good to know that you had a good experience. Let's dive right into it because I have a few people that pose a good question. Um, as a taxpayer, right? What do we need to do, or what do we need to position? How to position ourselves so that way you can better serve us?
Well, that's a great question. I wish more of my clients asked that. One of the first things, a few things that I notice in the practice, and even my father, my uncle, and other professionals, we always talk about is information. The best way you keep your information and your records helps us to be able to give you maximum service. Not just whether you're a business owner or individual, it helps us to locate advantages, tax advantages, and also helps us to make sure that your stuff is accurate as well. So information and the way that's delivered is number one. The second thing that comes into mind immediately is transparency. A lot of times people withhold information that may be beneficial
Hmm.
uh, for their taxes, but they're not transparent. And the more that we have to investigate, it makes our job harder because we might miss something that could be beneficial to you, or we miss something that may come back and impact you negatively. So transparency after information is the two major things that you should come with when dealing with any professional, especially tax, financial, legal, those worlds. You should be information and transparency should be the top two things if you really want to get top-notch service.
Speaking of transparency, can you give an example of something that people should be transparent about and that can impact them?
So I'm going to give a very easy one. Not being open about all the tax documents that you receive. So one of the easiest things is people receive, I'll give you one that a lot of people can relate to, the premium tax credit, the 1095A. They leave that out. Well, depending on your situation, that's a vital document. And because everything's computerized, leaving something like that out, you're going to get a letter later on and you're going to be penalized. I deal with it almost every month.
Quick
That's
question:
part of it.
what makes it so vital?
But what makes it vital is you have to report it because it could be a taxable impact. So, and not just 1095As, but 1099 miscellaneous, where we have independent people who have side jobs that leave that out. You have companies, business owners that leave that out, or whatever the situation is. Those documents are important, and people leave those things out thinking, oh, it doesn't matter. It isn't a large amount of money or whatever have you, but they don't understand that their chances of receiving a letter in the mail go up exponentially because everything's computerized. So you withholding tax information from us creates a massive problem. Now, the other transparency issues we see more on the business owner side is just certain things or transactions, whether a lot of times it's income related transactions or it's expense related transactions or things that they've done that they are not transparent with of, hey, Jason, we sold this asset. They are not transparent, or, oh, Jason, we bought this asset, or whatever their business transactions are. A lot of times that creates problems because things are missed, whether beneficial or things that they may view as not beneficial or missed. But if it's uncovered, not by us, but by whatever government entity, that creates more problems. So in our practice, we see it from time to time. We still try to encourage our clients, whether individuals or companies, to please be transparent with us, and we will work to make sure that you get the best outcome within the law possible.
That's good. Um, let me ask you this. What's the difference between last year's tax season versus this year's tax season? And what do you suggest that we do to have a better tax season? Because every year things change. And especially when you have different political people in office, the taxes change as well.
That's a great question. A lot of people actually don't realize that. You're right. It changes depending on who's in office, whether that's admitted or not, but you see it. This tax season compared to last tax season was different just because of obviously the global pandemic of COVID-19. Having to shut down and not have your office open during key months of March and April, and even the summer, depending on the firms, made it more difficult as far as meeting with clients. Some clients are not as technologically savvy as others to do Zoom meetings or Microsoft Teams meetings. So that dynamic made it difficult for the industry, and just in general, the concerns. So what we saw is people push back their tax filings even further past what the government allowed, especially if they were in a position of owing because of the economic unrest, or them having in their business or personal lives having financial distress because of COVID.
Will
So
they get penalized for that?
yes, they will, but the argument or the thought behind it is, they have to try to make it now. So if you're a company, and we've had clients that were greatly impacted by COVID, you're trying to keep your doors open. So yes, legally you should file or you're going to be penalized, but those businesses and business owners and partners, etc., were more concerned about keeping their business afloat during this time period than actually filing on time. Now, a good portion did. Some were able to make their extensions. We filed a lot of extensions for companies and our individual tax clients. About probably 85% were able to file by the extensions, even this past one of October 15th. But we still have around 15% that have told us, hey, we're going to get to it when we can. So that's what really is the difference between 2019's tax season and 2018 is the pandemic and just the physical issues of having those in-person meetings and also the economic concerns.
Okay. So as far as like the taxes itself, that's embedded in the what I'm guessing the criteria that you have from 2018 to 2019 that remain the same, is just because of the pandemic that's causing it to have that's going to cause a different effect.
Yes. So
Okay.
the laws pretty much remain the same. It's just the whole system of how things were done got turned upside down because of the pandemic. Now, going into next year, that tax season is going to be different because of the CARES Act, with things being changed, such as the ability, if you're under the 59 and a half rule, you can pull your retirement accounts and not suffer I believe it's the 10% early withdrawal penalty on top of the taxes that you were charged. That was waived for 2020 due to the pandemic. There's some other tax rules that have been laxed or changed that we'll see the outcome in 2020. But that's the most notable rule that affects probably a larger portion of the tax-paying population.
Okay. Now, one thing, if I own my company, and like, what's the best way to keep track of deductions?
Accounting. And it sounds stupid, but it sounds basic, but it's very true. So there's different levels of accounting. There's great programs such as Quickens or QuickBooks that business owners can use to keep track. If you're unable or unwilling to use those things, I recommend using Excel, where you just keep each month and you kind of just account for your income and your expenses that way. If that is cumbersome, then old school, a ledger where you keep track of your income and your expenses. So those,
Probably
you
a little
have to,
tedious, but it's important.
yeah, the best way, of course, is utilizing technology and software. Then if you can't do that, then of course Excel, and if you or whatever documents that you use, and if you can't do that, then yes, the final measure I'd recommend is handwritten. Although folks in our industry, we hate to see a handwritten ledger in 2020 or 2021 or anything past 2000s, but it's whatever works for the business owner at the end of the day.
Do you guys use like bank statements to use as deductions, or is this
Yes.
okay?
So your deductions can be shown on the bank statement. One thing we encourage everyone, whether you're a startup or your established company, is you want to have a separate business account where you run everything through, because one of the things that come up a lot is commingling. And commingling just means you're either using the business account for personal and business, or you don't have a business account and you're using your personal account for business and personal.
Mm-hmm.
And surprisingly, we've seen it at all stages. So we always recommend you keep a separate business bank account, and you make sure most, if not all, of your business related transactions are kept through that account, and your personal transactions are kept in your personal account. And we strongly advise that for a myriad of reasons.
Now, if we have the separation, there's no commingling. There is a separation. I guess my question is, all right, I'm using just strictly my business account and nothing else.
Mm-hmm.
Is that enough for me to go to a tax person and say, hey, or do you still recommend that they still use a software?
So it depends.
Okay.
So, you can present your own financial statements to your preparer, or you can bring your bank statements and they can prepare your financials, which is needed for the tax return. As far as our firm, we do both. We have clients that have their financial statements and we're able to use that. And then we have clients where we use the bank statements and prepare the financials and then prepare the taxes.
Oh, that's good. Now let's go back to it. Now I know when I say go back to it, I want to go back to the keeping on the corporate side. Now I know there's a lot of companies or corporations that get tax breaks that regular individuals do not get. Right? Can you explain some of the benefits, or how can I, as a corporation, if someone is interested of those to reap those benefits, how can they maximize it?
Well, that's a great question. The first easiest answer I'm going to say is to hire a firm like our firm, Bovell Financial, easy plug, that know what they're doing. They're able to guide them through all the potential tax breaks. A lot of times, we watch the news, we see the headlines of this Fortune 100 or Fortune 50 company has a tax rate of 5%, 10%, or even the companies that do not allegedly pay any income tax. And there's a myriad of reasons, and each company is different, but a lot of times they leverage tax professionals and they have tax planning. These are all things that they do. So we do the same thing with our clients. If you're a business owner, you should have tax planning. And by the time the year is over and you come to me, there's opportunities and, of course, tax benefits that will work to, if you qualify to use, but it's kind of after the fact. A lot of these corporations have pre-planning. So what we encourage our clients, whether you're a startup or a fully established company, is you should probably have tax planning at the start of the year. So we're meeting with clients in this fourth quarter concerning 2021 so
Right.
that they're able to enjoy all the benefits that is allowable under the law for them. But you come to us by the time it's March 15th for filing, there's only but so much we can do. So those are the major differences that you see between a major company and a company in its earlier stages. Is just tax planning. And that, of course, is the number one thing. The second thing, of course, is the laws that you see. So the larger companies are able to take advantage of certain things that are put in place to try to encourage economic growth and encourage those companies to grow and to be in certain states and localities. So those things come into play too, that maybe the regular business may not be able to benefit from. But at the end of the day, the best thing, no matter what size you are,
Mm-hmm.
tax planning.
So to summarize it, number one, it's best to get ahead and start early, so that way you can reap the benefits. Because I hear it all the time when people use like Trump and Bezos of not paying taxes or paying 700, I think what, 720, 730, whatever the amount is. And I look at it both ways, yeah, I agree they should be paying taxes too, but at the same token, I'm looking at it, is that a bad thing or is it a smart thing that they're not doing it? Right? That they paying less taxes? Because if you're looking at it from a corporation standpoint, that may be a good thing, that they got somebody to really handle their taxes and they don't have to pay a lot. But then on the flip side about it, you're like, they're making that much money, so they should be paying some more taxes. So I guess that it all depends on the law, right? If the law is on their side and if they're able to get away with it, or if not necessarily get away with it, but to your point, if they're able to pre-plan and get it done correctly.
Yes. So it's, that's the major argument that's being debated now. And I think that's debated every election on what is the corporate responsibility. So, of course, every corporation, whether private or public, wants to not pay taxes or pay as little as possible.
Mm-hmm.
Now, the flip side of that is those governments and the citizens in that locality or in that country may say, hey, you have a responsibility as a citizen, a corporate citizen, that's the word that you hear that's used a lot,
Right.
to help pay for the government to keep this country going so that you could reap the benefits. So that's always the argument. Obviously,
Yeah.
both sides see it differently because, to tell you, and this comes from intimate experiences of speaking with these companies, executive team, or the owners, they feel like, hey, We're already a good corporate citizen. Look at all the people we employ.
I was
Look
just
at
about to
how
say
we
that.
make the economy go by the supplies we're paying for or by the product or service that we're giving. So
Hmm.
that's their argument of, hey, we're paying different various taxes that people don't see, and we're bringing the economy along. So we shouldn't have to pay uh, income
Yeah,
tax or a high income tax. So that's the back and forth. I personally think it's going to be the back and forth until the end of time. That's just something that's a part of capitalistic democratic system. So it's always going to be the argument.
yeah, and I can see the argument too, because if if they're providing jobs, and it's just off the head thinking, if they're providing jobs, and the more I'm assuming that the more people they could employ, less taxes. If they start paying more taxes, I'm guessing that's less people that they're going to employ, and that could be an argument, and I could see the other side of it. But like you said, it's going to be an argument for years to come, because we're still in that same dogma of system. So it is what it is. But it makes sense. I agree with you. Um, so what's going on with you right now, personally? Like, what are you working on?
Well, personally, right now I'm working on providing CFO services to our clients. We have clients in various industries, but a focus in the financial services world, private equity clients, venture capitalist clients, investment management clients, wealth management clients. We have clients in the real estate industry. We have clients in the legal industry. We have clients in the, of course, in the IT industry. So we provide CFO services, we provide advisory services, and advisory means sort of what the word is, depending on the situation. Special services where we're doing helping with valuations, negotiating deals. We're currently in the midst of doing that, helping them with M&A work, which is mergers and acquisitions, helping them internally go over certain things or look at certain cost-cutting benefits, tax benefits. We're providing right now, still doing tax compliance, also tax planning, as we spoke about.
Hmm.
So those are the things right now that is keeping myself and the team very busy. So that's what is going on right now.
Uh, Quick question: at what point did you realize this was a career for you?
So it's funny. I would say in college, I had an idea, but I was still open and looking at different lanes in the business world. So I knew I wanted to do business. I was majoring in accounting, but I started off, even before I went to college, interning with Morgan Stanley, also interning at different companies, investment companies. So I was thinking, well, maybe I'll go and do finance, do investing. Really had the accounting and advisory and tax on the back burner. Although my father and my uncle had firms, I still wasn't sure that was the way I was going to go. But once I got to grad school, I started to say, well, you know what? I believe this is my lane. But I still always kept it open,
Hmm.
but I enjoyed it. So definitely, I would say by the end of senior year, going into grad school, I said, all right, this segment of the wide world of business is where I'm going to make my market. And I'm happy with the decision. It gives me flexibility and allows me to work and do various things that I found enjoyable, fortunately.
Yeah, but coming out of college, you could have went and started working with your father and your uncle. Instead, you decided to go work for another company.
That's a great point. So yes,
Yeah.
I got my start at one of the big four firms. That was a good experience. Met a lot of great people. I kind of wanted my own experience with corporate America because at that time, when you're in school, that's what's pushed. And also, once I went to grad school, that was pushed. And that's the route that I at least wanted to experience first. I had the internship, so I did know about corporate America and how things went, but I still wanted that experience. And, my father was pretty good about it. He didn't really pressure me. He said, hey, go and get the experience, see what you learn, and the right doors will open up and you'll figure it out. And
Hmm.
of course, naturally, I will say it was my destiny. Things just opened up that led me to uh, going independent. And I haven't looked back since.
Yeah, that's good. But what was the motivator to allow you to go independent?
Well, a myriad of reasons. So being able or having a background where I already from an early age was able to see how life was in the independent lane, and then getting as an adult the experience in the corporate lane,
Hmm.
I was able to make a decision where I said, hey, for me personally, I enjoy the freedom and the opportunities that the independent lane provides for me. Now, for some people, they like the corporate lane and there's certain benefits, but for me and really my vision for my life and what I wanted to do and the impact I wanted to have, I truly believed then, and I believe now that the independent lane was for me. Now, there's many reasons, one, the freedom, two, the opportunity of actual impact,
Hmm.
and then three, something that everyone likes to gloss over, but the financial benefits of being independent compared to being corporate. Now, of course, that can go either way, but if you're able to be successful independent, more often than not, the financial benefits far outweigh the financial benefits of being corporate for many. Now,
Right.
if you're the 1%, actually, it's less than 1%, and you hit the high executive level of these major corporations or firms, then that's debatable. No, more often than not, the financial benefits are in favor of the corporate world. But for the vast majority of those in the corporate world,
Hmm.
if you have success in the independent world, your chances of enjoying better financial fruits are astronomically higher. And I'm willing to debate that with anyone because I have the lane that I'm in and our firm is in, I get to see across the board.
Right.
I'm kind of in a unique position where our business is the financial business of corporations, companies, nonprofit organizations, and individuals. So I'm able to get a gauge completely different than if I'm in the IT world and all I do is IT. I
Hmm.
might have an understanding of the IT world and the financial structure, but I can only speak to that. In my world, I service everyone.
True.
So I'm able to contrast and compare a lot of times.
Yeah, that's true too. But then running, some people run, they have a own, like for example, you have your own office. You got one in Rockefeller Center and you got one in Atlanta and Georgia. But some people run their office at home, right? And being independent at home. Uh, can they reap some of those benefits of you know how do you work that out when some people say you can deduct the cost of your living expenses or your rental expenses or whatever it is, your mortgage expenses, because you have a home office. And some people say, no, you can't. Like, which one is it?
So I really hate to be an attorney and say that it's a combination. So in the past, the tax code allowed for home office deduction, but it was and still is a highly contested topic because the hope or the concern of the IRS and even the state and local agencies was they didn't want it to be abused. And it's for the longest while, it was still a phenomenon. You only had a small percentage of people who actually worked from home. But
Mm-hmm.
over the past 5 to 7 years, working from home,
True.
or even a decade, is no longer a phenomenon. Running a
That's the
business,
norm right now.
yeah, is no longer a phenomenon, even before COVID. Now with COVID, it's very much here to stay. So the pushback, even if you followed the letter of the law before, was so great that a lot of people in the industry would say to their clients, we're not even going to try to take that because we don't want the pushback. But now that it's the norm, I encourage people, if you have a legitimate business and you're working out of your home, you can deduct certain things allowable by the law, because your home is where you're conducting your business. And it's not crazy. It's not a ploy. It's the reality, especially now with COVID. So I would definitely encourage everyone listening, if you have a business that's being ran out your home, to make sure that you try to take advantage of that. And, you go to someone that's knowledgeable, you read up on certain things, and you take advantage of it.
All right. So let's go back to earlier when we discussed having a separate bank account. Now, if I'm normally paying rent from my personal account, and now I start my home business, and I'm funding I have a home operation. Now, do I start making payments through my business account now, or do I just remain as a personal account? Like, how does that work?
That's a
Or is it
great
possible?
question.
All right.
That's a very great question. And this is once again the gray area. So, what we encourage our clients is, number one, practicality. So, what is the most convenient for you? So, if you're paying everything out of your personal and that works for you, then keep it paying it out of your personal. What we would then come and do is, at the end of the year, we would gather the information. You'd say,
Mm,
hey, I paid $10,000 in rent. My utilities was $4,000, and whatever have you, was whatever amount that you come up with. And then we will sit down and go over everything and say, hey, according to your situation and what the tax code is saying, we can deduct out of $10,000, we can deduct $3,000, $4,000, $5,000 of your rent and of your utilities, a quarter, et cetera, et cetera. And that's what we do, because it gets complicated. And one of the things that, I personally strive, and I preach it to everyone at the firm, is we want to make it as practical and real as possible. A lot of times with some of this tax advice that I hear, it's not practical. If you're running a business and a normal person, it's tough to do some of these things. So we try to make it for each of our clients as simple as possible. And then we'll just do our end to sort through it and do the best in our client's favor when it's time to file. So that's what I recommend.
no, that's good. Because I think that's one of those debatable things that people. But to your point, COVID had impact everything and probably changed the norm on how we do business. And because of that, I think it should be, especially if you're at home all the time and you're doing work from home, it should be part of it, part of deductions, in my opinion. But it's good to know that we got somebody like you that we can always call and contact and get the thorough information. Um, Now, let's say somebody's really hearing you and hearing what all the information that you just shared, and they wanted to get into that accounting field or the CPA field. What would you recommend?
Find a mentor first and foremost.
Mm.
Find a mentor, and then because you have the age that we live in, this technological age, you can look at YouTube or go online and do your research on the field and get direction and guidance. Because if you, and this is with anything, if you don't get guidance, you might make uninformed choices that you don't realize was not the best for you. So with our field and with any field, I would say try to find a mentor, do research, and try to get experience even before you graduate. If you're in college, try to get internships, of course, in the accounting world, firms, or even in what we call industry companies where they have accounting department, tax department, so you can get as much experience as possible in our world.
Yeah, that's good. Mentorship is very important. Yeah, that's very important. Uh, I know you dabble into real estate as well too. You want to share some of that? There's so many experience. You don't have to go into details, but
Yes, yes.
yeah.
So I've had real estate clients for years, from mom and pop offices to large corporations. And it's always been something that's fascinating to me personally, and I see the benefit of it long term. So finally, starting last year, I was able to form a real estate company with a close family friend and client, and we bought some land and built our first home. It was a learning experience. This is what I tell everyone: even though you do your research, there's no research like practical experience.
True.
And one of the things that I learned, even though we did our research, is once you're in the proverbial game, there's things that your research didn't tell you that you have to adjust to. So
Mhm.
for us, the adjustment was we bought the land, we started our build in winter, and of course, had one of the toughest winters where we weren't able to pour foundation, and just in general, it impeded our building, our construction for almost 3 months. Fortunately enough, we were still able to build the house, was able to sell it and really interact with the owners. They loved the home. It was beautiful. We were able to make a profit on it. But the lesson that we learned, and anyone listening, if you're doing new construction, do not build in the winter. But everything else was a good experience. We're moving forward, increasing our output with building. One of the principles that I always tell people is, if you're entering any market, whether it's real estate or anything else that you're new to, try to start off small. So we didn't start off saying, hey, we're going to build 3, 4, 5 homes,
Mhm.
because that's where you get into financial trouble and have different stresses. So we started off with one. We got the experience, and now we're moving on to a few homes, as well as going into commercial in the foreseeable future. But so far, it's been good. Gotten to practice some of the things that I preach and I see others do, and what I preach with my own firm and applying it to real estate. So it's been a good experience so far still, but
I think that
still a lot to learn.
right. And the thing that stood out to me when we first talked about this was the fact that the contractors, a lot of well, what was astonishing to me is that you really have to be on top of on top of the contractors. If you get somebody that's good, then you're okay. But if you're not certain about that person, then they can actually drag the project. And after speaking with you, I spoke to a few other people when it comes to development, and they say the same thing. When it comes to contractors, you really got to be on top of them because basically the ball's on in their hand until it's done.
That's the number one thing when it comes to anyone trying to get involved in real estate. Your contractors can make or break your budget. I don't care how great your comps are. If you have a contractor that isn't good or isn't, what's the word I'm looking for? Isn't of high character that you can trust, they can turn that project into a nightmare. So for us, we were fortunate that we had a great contractor. I'd like to give them a special shout out, Marmos Properties. So we were able to trust them and they did a fabulous job. And that really saved us from taking a major loss with that project. So I would definitely, the one key piece of advice I would give to anyone is contractors. That's the number one thing when you're trying to get in there. So you have that, you have a good part of the battle done. Of course, you have other things such as comps. You have to look at making sure that you stay within budget. You expect the unexpected. And then,
Right.
of course, get into the final selling place. But contractor is number one. And I preach that and will always preach that.
You guys build it from the ground up.
Yes.
And, and turned around and you sold it, made a profit. What's the taxes on that like?
So for us, because this is the company we started and it's in line with the company, we would face ordinary income taxes. So what that means is whatever the tax rate is, we would face.
In that state?
Yeah, well, federal and state.
In state, correct.
Yes, but if it's what they call investment, where that's not your normal trade or business, and you're involved in real estate, what they call passively, then the gain on the sale is treated as capital gains. And capital gains, you have long-term and you have short-term. So capital gains in general are taxed at a lower rate than ordinary income. Now, short-term capital gains are taxed higher, and all that means is anything that you make under a year. So if you sold the property or asset under a year, you have to pay short-term capital gains, and that rate is higher. I can't remember the rate off the top of my head. I want to say maybe 20 or 25%. If you sell your property or asset over a year, that means you held on to that property for a year or longer and sell it, then you have long-term capital gains, and that's a smaller tax rate, which I believe is 15%. But this is the catch. If you're in real estate and you're aggressively in real estate, you really don't, and your business is flipping properties, then you don't remotely want to hold any property for a year, because that means you're burning through your profit and you're possibly in a loss.
Correct. Unless it's an income property.
Yes. If it's a rental property, then yes. But if you're in the flipping business, then you don't want to hear those words, long-term capital gain or anything that has to do with long-term.
That's correct.
So you're in and out, you're in and out, you're in and out. Now, if you're a real estate investor or real estate owner that has rental property, then you want to be in the capital gain ballpark, and you want to be in the long-term capital gain ballpark. So it just depends on your business model and what you're doing. And that is how, of course, it's treated with taxes. And that's with a lot of things.
Man, it's been great, man. Hey, anything final notes that you like to share with anybody?
The final notes I want to talk to the audience is whether you're a business owner, an aspiring business owner, or you're just someone that has a passion in the career you're in. The number one thing is to get to whatever plan you have. I've seen a lot of people wait and wait and wait until things are perfect to do whatever they're trying to do, and it's never perfect. So I would tell the audience, it starts now. So whatever you're trying to do, it really starts now.
Yeah.
So if you're trying to get into business, start now doing the research and figuring out what your product or your service is, and trying to see what your customer base is. If you're in your career and you're trying to advance, figure out what it takes to advance. It might be some extra schooling. It might be some personal things that you need to work on, some opportunities you need to look at. Whatever it is, I encourage everyone that it starts now. If one thing this pandemic has taught us or should teach us is that the future is not promised. You have to start in the present, and you pray and hope for the future, but you're as prepared as possible.
Yeah, what's that saying? That old proverbial saying, uh, "Hope for the best, but prepare for the worst."
Yes.
Yeah. So you wanna be prepared.
Yes.
Yeah.
So always that's the advice. And of course, there's a lot of other things I would love to discuss, but I know our time is up.
Yeah.
So hopefully you have me back on the show.
Oh, of course, we're gonna have you back. But before we even, you know, out the gate, 100%, I'm gonna have you back. That's not even a question because I think we just scratched the surface. We didn't even really go deep into pulling back the onion and really get into the things that we talk about. So that's automatic. One last thing, where can they reach you?
So they can reach me. My email is jason@bovellfinancial.com. Our website is bovellfinancial.com. Facebook, you can look up Bovell Financial. Instagram, Bovell Financial. Twitter, Bovell Financial. As you can see, we keep it consistent.
I like that.
It's on the shirt, ladies and gentlemen. So yes, so all you have to do is go to Google, Facebook, or whatever social platform that you have, and you can find us, and we're always willing to help. We help in a myriad of ways: tax consulting, accounting, CFO services, and other advisory things to help you to be as successful as possible as an individual and as an organization.
Yeah, and then that's it right there. That says it all. Val, thank you so much, man. Really appreciate you. We're definitely going to have all your links down in the YouTube channel. As always, a final word from me. I just want to thank everybody for tuning in. We appreciate you. We on Instagram _it_starts_now. Check the link below. You'll see it. If you go in the bio, we also have the link to the YouTube channel. Please tune in, listen. Bovell dropped a lot of gems today, and we definitely appreciate him for stopping by. And thank you again. And that's it. Just one last thing. It starts now.